Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap TraderLab community? Thanks, Dan. Good morning, Marty. And Stephen, good morning to you. Thank you so much for supporting TraderLab. Morning, everybody. Appreciate you stopping by the lab today. I want you to know this is Christmas week. And because of that, I will be streaming Monday, Tuesday, and Wednesday this week, but there will be no stream on Thursday and Friday. Next week, I will continue, and we will give you the schedule for next week, but the markets are here, and we will be here to support you and help you move your business plan forward. A little side note, I am streaming from Costa Rica, and monkeys were swinging on the vine. This morning, internet went down, so I have a little hole in the data. And if I do drop out, whether you're in YouTube or the Discord TraderLab, eventually this recycles, takes a couple of minutes. It might be up to 5 minutes, and then I, as they say, shall return. Now, this stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. Now, it's based on structured trades, and these trades are available to all of you in the Bookmap Discord TraderLab community. Now, the TraderLab is a community of like-minded traders who've come together to leverage their collective experience. This is about the business of trading. It's also about being in a community that is all about the business of trading and creating potential sustainability. Now, the thing about the business of trading, it is very different than what you might imagine it to be. And I always have found, at least for myself, and I'm doing this going on 47 years, both professionally and otherwise, out here with you, is that we all have winning trades. Now, the problem with that, and you're thinking, well, that's not the problem, that's the objective. Well, that is a problem if you don't have an edge. Then you're having random winners, but over time, you're still going to be paying the other side. It's just the same exactly as gaming works with casinos and gamblers. Gamblers have winning hands, and the casinos pay the gamblers, but over time, the casinos are extracting dollars from the gamblers, and that's kind of our business. So the winning trades are not the issue. It's actually, do you have an edge, and do you understand the business you're attempting to be in? And that's why I created the TraderLab. Now, let's move forward. We have a lot to talk about. And today, I want to focus a little bit on timeframes, choosing the time frame to operate in, and what makes that different as far as how you might approach the market. Is it all the same, or is there something different about it? I'm going to try to get into that and explore that a little bit today in our limited time together. And once again, thanks for visiting TraderLab. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. If you're interested in seeing that, there's a library of webinars that are available to all of you in the TraderLab, of course, at no cost. Some of them up to 4.5 hours, almost 5 hours long of real-time narration. So if you're inclined, get in your Barca Lounger, maybe sip a mint julep or something appropriate, and then you can see how it unfolds. And that is stops, successful trades, trade management, and alignment, and how to determine alignment. And the thing in our business, of course, that makes it so wonderful is the market's always random and also potentially changing. So unlike something that's very static, we're in a dynamic environment, and that's what makes it so challenging for us. And to add a little, what do they say, frosting on the cake, it's that it's random. So we're operating in an environment that's random. So somehow we try to put a process over the market and try to predict what it'll do. And there's a lot of other elements, things we do psychologically, but we're not in the business of predicting anything. We're really in the business of alignment. At least that's the way I've kind of come to view it. It's not for me to say what the market will do. It's for me to understand what the market might do, where it might do it, and then if the stars align based on my plan, not on what the market will do, based on my plan, my risk profile, and my understanding and vetting of market mechanics. I then, if I have an edge, I have the opportunity to extract dollars from the other participants, even though I'm going to pay them. How do I resolve this? Well, that's what TraderLab is about. Maybe it can help you. Now, speaking of helping you, if you've ever thought about Bookmap, it's on sale. This is the Black Friday sale, and it only goes through next week to December 31st. You can save a substantial amount of dollars. And if you've ever wanted to try Bookmap, here for a monthly subscription, and put your little toe in the water, you can get 60% off plus data for 1 month. So these are available. Or add-ons, 50% off an add-on. If you have Bookmap down, you want to try an add-on or a basket of add-ons, a suite. There's all kinds of different things. Go to bookmap.com, check them out. You're running out of time. If you're still thinking about it, I know for many of us, it's holiday season and there's gift giving. Sometimes you'll also want to think about giving yourself a little gift for working so hard on trying to build a career in this business. Now, I want to go into the hierarchy of trading. And I was having a nice conversation with one of our veteran traders in the TraderLab. His name is Tapish. And it's really interesting. I always enjoy interacting with traders. Of course, I've been doing this so long. I've been interacting with traders for a long time. But there's always something that gets really interesting. And this is the question of time frame and how we break the market down into chunks and then align in the chunk. So I'm going to go into that. I want to kind of go into that today. And I want to thank Tapish for participating like he does in TraderLab and everyone else who participates and puts themselves out there, because it's only by interaction that we draw out topics and other traders who are in TraderLab. And TraderLab has a huge number of participants in it. But like most trading communities, a lot of them sit in the background, take it in, but there's always this fear of not looking, quote, smart. Well, nobody's smart. There is no smart. The smart thing, at least I found, is ask questions. Put aside ego. Ego in and of itself, or the need to be right or to get approval and all of this, is really a psychological impediment. It's not an asset. It's really an impediment. We have to be willing to lose in this business. We have to be willing to be wrong if we're judging ourselves between right and wrong. Do you know what right and wrong is in this business? And then I'll move on. It's not a winning trade. That's not right or wrong. Right or wrong is following a plan that has a statistical edge. If you have done the work and you have an edge, then the right thing to do is extract the edge and execute it, isn't it? Isn't that the right thing? And taking a stop when you execute that edge, which is part of the edge, is that a right thing, being right, or is that a wrong thing? Well, actually, it's the right thing. So right or wrong is not about predicting, which is what our orientation is in our outside world, outside of trading. Right or wrong is your plan, and only executing and entering, I should say, and participating in the market with an edge. If you don't have an edge, you're a gambler. If you follow your plan, you're right. The outcome is always random. I hope that makes sense. And if you're visiting today in YouTube, thanks for visiting TraderLab. Appreciate you guys being here. If you have questions, post them. Also, please give a like if you find this interesting. Now, this is very simple. Trading is simple. And you're going to say, no, it's not. And I'm going to say, yes, it is. Let's politely disagree with each other. Trading is simple. Now, the problem, I'm not insensitive to the problem, is the randomness. But the process is not complicated. The randomness is what's complex for us because we need certainty. We're wired to avoid risk, and yet we're in an environment where it doesn't exist. How can you put these two together? They're in conflict, right? That's a psychological element. But how does this thing work? It's shopping. All trading is, and why we have a market, same as your supermarket. Let's look at the connection. It's a market. What happens in the supermarket? If it's on sale, 5 go in the cart. If it's a fair price or retail, you just throw it in there. You get what you need. You agree to pay it. You might grumble a little bit because prices are generally higher, but you need the Bottle of ketchup goes in the cart. Then if it gets too high, you'll either buy an alternative product or you won't buy it at all. You'll say, forget it. I'm not buying that ribeye. You know what I mean? So this is shopping. This is how, and this creates rotations in time frames. So for us, instead of it being like a supermarket where time is extended and prices don't change much, we're doing the same thing in microstructures or short time frames. So time frame really determines how you're going to operate. And in different time frames, we have something called different context. Confusing, isn't it? Now, what's context? Is the market going up? Is the market going down? Is the higher time frame up or is the higher time frame down? Intraday, is the market going down? We want to get short even though the higher time frame's going up. What is it? Conflict or plan-based, and then you've carved out a niche. And this is really where things can get confusing and even contradictory. I might be taking longs and other traders might be taking shorts. Is there a right or wrong? Remember what I said, is there a right or wrong? Your plan is the right or wrong, right? So Tapish, right or wrong? It's right, you'll see. So volume profile, how does this fit into this thing? That's how we see the difference in price because of volume. When all prices are not equal, so if we get a high price in the store, let's say that ketchup you like is up at $3 a bottle, you know, and you go, I'm just not paying it. Is there going to be a lot of buyers? Is the line out the door to get the ketchup there? No, there'll be very little volume up there. And you might need ketchup for your hamburger, but most are going to find an alternative product. Okay. Now, how do we see inside of all this? That's where order flow comes. This is almost like standing, looking over somebody's shoulder in a supermarket and seeing which product they pick and how many they put in the cart. Order flow. That's the buyers and sellers interacting. The sellers have the product on the shelf at a certain price. The buyers either buy it or they don't, right? That's order flow. So that takes us down into the micro level or watching the buyers and sellers interact. And this is everything else. Now, the time frame is really important. Now, this time frame doesn't change the order flow. That's just micro. But the time frame you trade in, this has to be worked out for you. And I'm going to discuss a couple ideas with you. By the way, since we are day traders, we're going to trade inside of different time frames. And this will make you a little nutty because you have to kind of put a stake in the ground, in my opinion, and find your groove, you know, your rhythm, what aligns with you psychologically. Are you trading the short-term rotations or are you just getting aligned with the higher time frame? And that's a risk reward and a yield issue. All of this comes into it. By the way, some of these trades I'm going to discuss here are in these 60 PDFs. There's no plug and play, but they're available to all of you in the TraderLab. If you're visiting in YouTube, there's about 60 of these, and they show trades, actual trades, live trades, and they're just things I threw together. This is not a trading course. This is, there's no cost for this. I just share my time and experience, and I've gone down the same road you've gone down. Unfortunately, I spent more time. So I started in 1980. This is order flow phenomena. This is actual trade I was in. I was short. This is a bracketing algo. You notice how it pushes and pulls. Market exploded. My exit was there. If I didn't have order flow, would I have exited there? No. Where would I have exited? Somewhere else into a stop. So that's all I can tell you about that. Can order flow help you? Like every tool, you've got to learn how to use it, where it fits. And Bookmap, don't forget, is having a Black Friday sale. So if you wanted to check it out, this might be a good time to do that. Now let's go to higher time frame. I want to go over that. This is Investor RT. This is my higher time frame software. It exports levels to Bookmap. Very cool. So this is Friday. Now, if you remember Friday, we had targets over this high. This is Thursday. So we tickled this high, got shorts in here. We opened higher, And then we got buy stops here, buy stops here, buy stops here. So the squeezeteria, as I like to think of it. Now, this is a volume profile, but it is called a composite profile. All I'm showing you is multiple days put together. Each RTH has its own auction. And then as you go up in consolidation, which is what this is, it is an auction in an auction. So let's think of it as multiple time frame. Our target was around 69.0709-ish for Friday. And we got here, and then we ran out of time. And if you followed the stream, and if you haven't, go back and watch Friday, because this builds on itself. Our support Friday was this level here at 68.45. And that, we just missed that by a smidge on Friday. That's support. Then what is our target from Friday? Here. What does this represent? The most volume, remember the shopping experience, in this consolidation. So I have a consolidation here, broke out of it, too low. What's my next retail price, higher time frame? Here. And if I come out of here, where's my next target? The buy stops here. And this, you'll see how this relates to Bookmap. So now I'm going down in time frame. And now I want you, if you're in TraderLab, and by the way, I had a data go out here, monkeys on the vine. So there's a little bit of, I have the prices, I don't have the order flow until the data came back. But now go to your grid sheet if you're in TraderLab. So we are opening. Now let's go take a look at some levels. This is that 0807 level that I just showed you. That was the target from Friday. It's going to turn out to be the low of the day, but we don't know that, okay? Let's remember, we don't know because we opened above it, okay? And that's going to be the RTH low. But before we get to that, let's come back. What do we know? Yesterday's high is here. So this is, we're opening in a gap outside of range. That's a gap outside of value. Now we go to our context sheet. This is process. Hope you get something out of this. This is putting a plan together and trying to create edge, or shall we say, put the odds in your favor for potential alignment. Now, I am discussing multiple time frames. So we're coming at this in a higher time frame right now, and then when we go down to lower time frames, as you think of it, or shorter rotations, then we're attempting alignment. And subject to your plan, not mine, the more you can align with the dominant side, the more you have the wind at your back. Think of it that way. So we're opening out of range in a gap. What does it mean? The market's out of balance. Now, there's one more piece. The ETH. Where are we in relation to Friday's RTH? In ETH, settlement is here from Friday. So if we're opening, lost it, but it's up here someplace, out of range, out of value, then, and the overnight low did not even get into the gap or test yesterday's high, that is saying the market has an inventory that's out of balance. So often what happens, and it's roughly 70%, and don't hold me to the percentage, you have to vet everything, around 70% of the time, if we are out of balance or the inventory is lopsided, we're going to rebalance. So you gap, the inventory's long in the ETH, and we're out of balance. The market then, the longs are vulnerable from the ETH, and then we can go down. So that sets up a couple possibilities. One is we open higher, we keep going. That's what happened Friday. We did not rebalance. Or we open higher, like today, still in an uptrend, but now we rebalance. So now we go down to go up. Confusing, isn't it? So in the TraderLab, you would know not what the market ever will do. You will know what it might do, and then you're going to be looking to see what happens. And then after that, it's, as they say, act accordingly. And what it really means is if you recognize a trade, that's in alignment with what you think the behavior might be, that's your trade. If you don't have a trade in that situation, then you're sitting back in your Barca lounger. So what does it all mean? Now, there's a little bit more. ETH low, didn't even get into Friday's range. That's bullish. What's the next thing? I forgot one other little piece. Value. We're outside of value, and the naked volume point of control, I believe. Guys, can you confirm the naked volume point of control? Where is that from Friday? I think it's here, but it's around 87-ish. 88 quarter. All right, we got 88 quarter done. Okay, this is what's called the naked volume point of control. And all this is, so this is market profilage, as I like to call it, terminology based on point of control, which is when we had market profile. When I learned it, it was point of control. I learned it from Peter Stottlemyre back in the mid-'80s. He created it, CBOT. So this is the highest volume, remember shopping, from Friday, the fair price. This is the intermediate time frame fair price. This is the ETH, the last auction, fair price, highest volume from the last auction. And what do we know? We know the market's opening in a gap and that the inventory is long. That sets up the rebalance, and we call that responsive selling. Now, the thing about this is nobody knows if it'll happen, but there's over a 70% probability it will happen. So you have your choices. So for me, and I'm going back to the higher time frame, all I want to do is get long today. I don't care about getting short. In fact, I want to see shorts come in the market because they become buyers. Yet it doesn't matter whether you're going to take the longs or shorts. What it is which side has the wind at your back, potentially, and of course it can change, versus which side is the weak side. So I'm just taking it from a different point of view. But let's look at the first trades. Now I'm going to show you trades. I'm going to discuss them with you. It doesn't mean I take these trades, but it means I understand these trades. And subject to my trade plan, I can be trading short, I can trade long, I can trade anything. But I have found for me that it's a lot of work to flip and flop, though some of you, if you have an edge, it's your job to do it. That's your plan. For me, my plan is to get long. So let's look at this. This is called developing volume point of control. Right here, now I'm going to show you micro. So that's all this is, nothing more. Now remember, the retail price is here. The nature of the market, this is from the ETH, so that's the last auction. Nature of the market is to always check the retail price. What's too high, what's too low, what's going on. And now when I go down in time frame using order flow, and don't forget there's some stuff missing here because my internet was down. And don't forget also, I'm in Costa Rica. If this thing drops out, it will recycle. Just be patient. It takes a few minutes. Okay, if you have questions, please post them. I'll do my best. Okay, so this is the RTH open, and I get sellers. Don't forget the inventory is long in the ETH, and so I can get a couple of things can happen here. First of all, I don't have a location for a trade here. This is strictly a profile. I call it VPOC migration. It's something I came up with many years ago. I just witnessed phenomena, and then I started thinking about shopping. This is why I always talk about shopping. This is high volume. The yellow line is called developing volume point of control. RTH open, it starts at 0. And then as the volume comes in, it moves around and is extremely sensitive because there's no volume. So volume comes in, it moves. More volume here, it moves. Hangs out here for a little bit longer, it moves. And then we move away. Where's the volume? Well, if we don't, until we pause, it's leaving the volume. So in a microstructure, and now this is language. So this is a foreign language or a musical instrument. I don't use indicators in the standard sense you guys think about them. I just read a language. So with order flow, Here's what I know. This is selling delta. You can see the sellers right on the open. Don't forget, we're thinking there might be an inventory rebalance. Right here, going to zero. Right here is the retail price. When the buyers get above the sellers, which is here, more buyers, this suggests to me that this is absorption. Now, I am missing some information, so it's incomplete. You'll see it when I get caught up. This is the new retail price. This is saying potentially too low. New retail price, breakaway. This is resistance right here. If I can't get above here, and the reason it's resistance, my sellers are here. So when I come back, it's resistance. But this is support. Support. Resistance. Rotate down, break high. This now becomes support. Support, support, support. Now it shifts high. Up here, what do I need? Watch. I need that. I need that. I get this with my sellers. This now is high volume, retail price, think mini mart, and I need to come above here to continue. Let's look. Too high. So I got to label this. Now, traders at TraderLab, some of them I think took shorts up in this area. I think. And we're having such a lively conversation this morning, which is really what TraderLab is about, because it makes us all think. Too high. The sellers now will not pay this price. So what do we know about here? Well, buyers are here. What else is in this leg? Sell stops. So if I come down and take the stops, now remember, and I think I might have forgotten this, the market opened out a range and a gap. That means it's out of balance. Is the market responsive? Yes. These are the responders. Market went up. The inventory in the ETH is long. Responsive selling. Where's my retail price from the ETH? The overnight volume point of control. This is called developing volume point of control because it's real time. And this is the last auction, the ETH. And the one I showed you down around 88, that's from Friday. Friday's too low. This is the retail price from the ETH, and this is right now too high. So that's resistance. This was support. Break below it. If this is too high and this is too high right there, and I can't clear this, and you got VWAP in mid, then down. Then I'm looking for this, and I got the overnight mid. So for me, no short, looking for longs based on what I've already told you. Now, here's the question. Is the market responsive? Yes. What do? We fade the gap back into balance. So that means responders. Are they the strong guys? No. But then what? We have to look for a bounce and a retest of the previous range. Did the prior range hold? Well, I know that if yesterday's high is below me and this is in front of it, the fair price from the last auction. Now I'm going to go to my statistics sheet in the TraderLab. Taking too much time? This is trading. One way to do it. We opened higher outside of range. So let's look at some statistics. Now, we don't know anything. Statistics are maybe it'll do this, maybe it'll do that. There's no 100% statistic, okay? But there's about an 81% probability-ish, and you have to vet these for yourself, past performance, not indicative of future results, that we get to the overnight volume point of control. By the way, I didn't mention the ETH high or low has a 97% probability. This was a high probability also. So high probability to go there, 82% probability to go there. Which one, Tom? I don't know. Resistance, new retail price. Watch. New retail price. Going to zero, Lewis. Well, I've got overnight mid, has about a 68% probability. And of course, the overnight volume point of control. So I'm looking for longs. Why? Because I'm over all my retail prices and this key price is my support in the higher time range. I just want you to see this 7 3/4, 8, there's no precision. So I already know if I come down here and I have my overnight VPOC in the same area, then I can buy it and take my risk, take my stop, or whatever happens, happens. As they say, that's life in the fast lane. So this is the fair price, responsive selling, overnight mid, overnight VPOC. This is my really the key price below. And I don't know. Remember, I have no clue, not my job. If I knew, I'd skip the ones that don't work and just go from there. This is the first long right here. Let me show it to you. Now, the thing about this, you guys have heard about real estate, location, 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 right? Well, that's the way I kind of think of trading. It's location-based. The other part is, while some traders will take this short, which is perfectly fine, I'm using the short because I have a little different viewpoint. And I trade both sides. But for this stream and for the TraderLab, my goal is to help traders have the best probability of building a sustainable business. You really need to determine, and again, just my experience from working with a lot of traders, coaching them and mentoring them over the years, is to align with the dominant side, because not all risk is created equal. The risk is not equal. If I can identify potentially the dominant side, even though I will take stops, if I can identify that, then I can get the range. The range is what gives me the potential for the profitability to pay for the stops I inevitably take. When I trade counter trend, I may not have as much range overall, and my risk reward might be lower over time. It's a matter of determining statistically where your edge is and avoiding the trades with less edge. And it doesn't mean you can't do really well trading counter trend or trading both sides. But if you can't trade with the dominant side, you might not be here to trade the opposite side. So this is my location where I'm looking to trade. 80% plus probability. This is the retail price in a developing time frame. This is the retail price from the ETH, the last auction, which is over. Right here, I see absorption. Let me show you. And this sets up a trigger. Now, this is called mean reversion. And the joke is it's mean. Now, I didn't finish talking to you about context. I'm not done with that conversation. Because we're looking for responsive selling, and we know this is our retail price, and we know we have super support under us, and of course we could go under there, we could do anything, anything can happen. Right here is a long to there, if it's in your plan. It's called mean reversion. This is the mean. And if I come here, now the only reason I'm taking this as long, and again, I'm just saying it is a long, it's not necessarily your long, is location, and there's no precision, okay? So right here is where the sellers are, and the absorption, you see the icebergs and the stops coming out, is here. Right here, I break high. In TraderLab, this is called a trigger. We come back, and right in here is the volume. Let me show you. I'm going to take you into something that's much more nuanced, and you have to learn this. You can't just go up, because you'll be chasing the market around. So you have to anticipate. So I know I have a high probability of going here and here. This is my area, and I don't know, and I take stops, you take stops, we have to get over it. Sellers are here, there they are, there's my liquidity, and the market's going to zero here. Absorption, there's the sellers. Why isn't the market going down? There's passive buyer there, and we don't know that. And here, the sellers here are still here. Come down. My high volume here, microstructure, I'm going to show it to you so you kind of get a sense of what this is about. This is a high volume structure or retail price from the ETH, and you already know about the higher time frame and the one from Friday. This is the same in a microstructure. So I'm using the same concept, shopping. I'm not paying that. Yeah, but it's on sale. Absorption. 4 in the cart. Sale. Don't know. Sellers were here. There's my rotation. Break high. Change. What does it say? The volume in here, the retail price in the mini mart right there might be too low. Let's look. What do? We test it. This is called mean reversion. And then going up in time frame, this is the mean. The mean is the high volume. So in the microstructure or mini mart, too low, you can't buy them here anymore. So if you want to go back to the developing daily time frame, higher time frame, then this. So they're the same, different time frames. And when I come back to the higher time frame, there, isn't it the same? Can you guys see what I'm referring to? Are you guys tracking? Can you see the logic in a multiple time frame orientation? This is a higher time frame volume point of control. This is a micro time frame volume point of control. This is a developing time frame volume point of control. They are the same. This is multiple time frames. And the way I think of them mentally is a vertical integration, like Matryoshka dolls. They're inside each other. Now, the thing, of course, is this is a fair price in a higher time frame. The overnight volume point of control, wherever that went, is a fair price from the ETH. And then we have fuel above us. This is my first long, not saying it's a trade anybody ought to take. It's a long. What can I tell you? Watch. This is the retail price. What's it doing here? There's more volume lower. That is saying maybe this is too high. This is too low. Let's watch. Where's too low? 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 That's a potential long. That's mean reversion. This is a long. That's mean reversion. And then you're looking to come across the range or not. This is resistance right here. I'm not paying that. Lower price. I should mark these. So what I'm doing, which I don't know what it looks like to you, I don't use indicators. All I'm doing is shopping. I mean, what is a market? Isn't it shopping? And what was too high up here? This. I'm going to mark it. Now, here's the other thing you need to think about. And this is something you might want to make a note of. And just think about this. Watch these streams again. I think you can get a lot out of them. What is at this swing high? And there was a lot of selling there. Well, there's buy stops up there. And what's down here? Sell stops. Why might the market go up? There's buy stops from these sellers. I always think about it like fuel. So if the market goes down and I'm looking for a long, I've got the buyers are built in. That's the buy stops. And then new longs, who, by the way, will become sellers because the sell stops. So in all time frames, there's something what I call fuel. And we want to trade into the fuel. Where's the fuel? This is Friday. The fuel is here, buy stops. So if I'm taking longs, and this was Friday's support, and now this is today's support, where am I going? I'm trying to go there. Does that make sense? And let's go take a look where we are today. What did we do? Fuel. So in all time frames, the same process. Why make this complicated? It's Matryoshka dolls. They're inside each other. Are you making this complicated? It's already random. So what are you doing if you're thinking? So what do we know? Here is resistance. It's right there. Right there. So market goes up, Trade management. So this was the first long. You had 2 entries. This, if you can recognize it, and the test. I always suggest developing traders wait for the test because mentally you're anticipating it. You're not FOMOing and being surprised, which happens anyway. But if you have a vetted plan, this is your entry. This is your scale, and then you're looking to come out the top. And whatever it does. Then it's trade management. So, but let's go back to our context sheet. What do we know? Market's out of balance. Is the market responsive? Yes. Those are the responders. They responded to the gap. What do? We can fade it, take a short up here to go back into balance. Have we done it so far? No. Watch for the bounce and a retest of the range or the value area. Is the prior range holding? So far, yes. So that's why a long. Context up. Let's keep going. Now what? We take these guys out. Thanks for playing. They get a coupon to the buffet. Now what? Watch. So me, no shorts. Other traders in TraderLab, short, having a good time. Everybody does their own thing. Doesn't matter. I lost my overnight VPOC. Where'd it go? Guys, is it covered up? Overnight VPOC? 11? Oh, it is covered up. Okay. So this is the next area. Remember, retail price. So this is the next area. And the probability of getting down here was about 80%-ish or higher. Let me look. Almost 82%. Past performance, not indicative of future results. So this is your area. Again, higher time frame up. This is your support in the higher time frame. As long as I'm above here, I'm not thinking about shorts, unless I'm a short-term counter-trend trader, just me. This is a long. Here. So here, going to zero, absorption, break high, location is here, looking for the long, break high, test, long right here, same trade, mean reversion. I called this a stop pick. All they did was come down here, grab some inventory, and then the trade is back to here, and then looking to come out the top. Still, same thing, okay? Now, so long, long, resistance was here, no clue. Now, the trade is to there for scale, and then you have to clear this, which has high volume. You can see it here, there actually, right there, variable high volume node, and then it's got to get above this. So, long again. So what we had is long here, long here, long here. That's at least for me, anyway. Now this is a structured trade that shows up at 9:30 Central Time. It's called the IBF. IBF. Now, the IBF is a reversion trade, and it's a very popular trade in TraderLab. And the reason it's so good in this condition is that I got support here in the higher time frame. And the first hour's high or low, so you know, taking one or the other out has a 98% probability. Taking out both of them, first hour's low, then first hour's high, is only 30%. But this is where you take the statistics and you put them aside, because the key element in this, number one, is something called context. Context is long. And as long as we're above here, and the IB is sitting, I think, guys, IB low, I believe it was like right around 10 or something. Is that right? 11? 11. Okay. So right here is the IB, first hour. We take it out, and right here, don't forget, context up, key location. This is a long. It's the same as all these other trades. It's called mean reversion. But because the context is up, we haven't gotten into yesterday's range. The market is still out of balance. And the yesterday's high is all the way back here. So, and the ETH low. Remember the other key piece. ETH low couldn't even get into the range. That gives me a very strong lean north, other than the ETH overnight inventory rebalance, 70% probability. That's what those shorts were about for those who take them. So this is a long mean reversion, same trade. So what I'm doing, and this again is just specific to time frame, is only taking longs because I'm out of balance, out of range. I have a gap, and so far we're not going into the gap. We are holding higher time frame support. Does that make sense? So longs only. And then where's the stops? Remember, this is the next target. So we come out the first hour's high, and the primary target was here. Now, right here, you could be done with this trade if that's in your thing. For me, this is the primary target. Also, on my chart, I have something called the low volume zone. I want to show you this. I mean, how do you put these pieces together? Now, I know it's going to be confusing, so let's try not to be too confused. Here, this. This day, I don't know if you can see this. Let me see if I can open this up a little bit. You see this day, we opened and did the Acapulco cliff dive. It was this big down day. Well, when you run like this, there's no auction. An auction is rotations and you get volume. Well, here there is nothing. Well, when you come back up there into an area where there's nothing to hold the market back. And what's up above here? The shorts that are in here, they become the buyers. So who are the buyers? The buyers are there. The buyers are there. The buyers are there. The buyers are there. And maybe the buyers are there. Maybe we'll get there. Maybe not. Maybe we'll come up here and get these guys. Maybe not. But what do I know? I've never filled the gap. I'm outside of range. I'm outside of value, which is the yellow line. This is too low. And longs. Now, this trade right here can be done. You could be back in your Barca lounger, or you're working a higher target, but you must use trade management. Hope that makes sense. Where are we here? Let me try to get back over here. I think I lost my place. Hold on a second, guys. So what this does, I think hold on. I'm on a laptop, so it makes it a little challenging. Let me try to get back here. Okay. So this is the target. This is the top of that low volume zone, not auctioned. This is where the stops were. There's the current high of the day. For me, that's my trade. Done. So where was the long from? So long there, long there, long there, long here. That's it for me. And now this is an interesting concept and a conversation or topic. And I think all of us that are here visiting TraderLab today, whether you're in YouTube or you're actually in the TraderLab, the question always remains, what time frame do you trade? And the conversation I had with Tapish today, which is he's a terrific participant in TraderLab, contributes a lot, a good supporter of the TraderLab. And I want to thank all the members of TraderLab who participate. And those of you who are not participating, the more you participate, the more you get out of it. There's no cost for TraderLab, so, take advantage of it while it's still here. It's not going to be here indefinitely. So just something to think about. So take advantage of it. So longs primarily, but now what about time frame? Do you trade, is this your time frame? So let's say this is your time frame, this kind of stuff. Well, what's your context? My context is up, so I don't take any shorts. Now, let me clarify that. For developing traders, you can take one side primarily. And when you're a developing trader, you're going to have to manage a lot of things. Your anxiety, you're going to FOMO, and all of this. So if you stake out one side, you're going to reduce your errors. Also, subject to time frame. If you trade a higher time frame, you will take less trades, but that reduces risk, it reduces errors, and if you get into a higher time frame, the risk reward is going to help you over time compensate yourself for the errors you'll make, and of course the inevitable stops we all take. So that's why I'm an advocate for alignment with the wind at your back, not counter trend trading. If you can't trade with the trend, you're not going to succeed trading counter trend. So it's kind of a sequence of progression. At least that's what I've found, and I've coached, individual traders over the years, and still do speak to a lot of traders individually, who reach out to me. I'm always available, to spend some time and discuss individual traders' challenges or experiences, because we've all done the same thing. Nobody's unique here. We're all the same, but we have to really understand we have much more in common than what's different. The things we have in common are the obstacles to operating in a random environment. That is the big obstacle. This is an alien environment, and our nature is to try to fit it into something we're familiar with. I'm going to say the only thing you can fit it into that you're familiar with is shopping. But instead of being in the supermarket where the prices don't change, every rotation is a pricing discovery. So we need to understand how to interpret what you see right in front of you. What is it? And how does order flow fit into this? And how do you put all these pieces vertically integrated together? That's what TraderLab's about. I don't use indicators. I'm not saying you can't. What I found for me was the indicators were not the solution. They were a problem. Because most indicators, unless you actually understand them in a very deep dive, when our nature is, because every indicator has random winners, that we think more indicators, more winners, or more certainty. Is that you? I hope if it is you, it's me and it's everybody else who's ever done this. The difference is that at some point you're going to find out that the problem is those indicators. It's not the solution. The indicators all have random winners, and when you take multiple time frames, multiple indicators, you're creating an exponential input of randomness in a random environment. So the only measure you have is P&L. P&L is not going to sustain you. The result of a plan with edge is what creates the P&L that is sustainable versus a P&L that is gambling oriented, which is not sustainable. Can you see the difference? Does that resonate with you? My Bookmap settings. Kaylin, go to, there's a link at the bottom of YouTube. Go down there and you can visit TraderLab. There's a library of webinars in there, and a document section. Let me see if I can show this to you. First of all, this is what the TraderLab looks like. There's a lot going on in here. It's a very active community. June, thanks for posting that. A lot of comments, a lot of interaction you can see, and it's available to everyone. All kinds of stuff going on. Charts posted, conversations, mutual support, rotational stop picking action. Look at this. Only one runner left, so we describe trades. This is not a trade calling room. That's a waste of your time. If you want trade calling, you just write out a check to a trading advisor or somebody and go do something else. The idea is to build out a plan and to determine, does it have a statistical edge? This is what the library of webinars looks like. Ned, thanks for curating this. The primer webinar has about 36,000 views, more or less. Is there a holy grail of trading? No, there isn't, but how close can you get? What about trading multiple time frames? Stop gambling, start winning. And why do most traders using indicators fail? Have you ever wondered? Well, you can get some of that and a lot more. Now, there's a document section also. 60 structured trades. That's the PDFs I show at the top of the stream. Statistics that I quote every day. You have to vet everything. My settings right here. So you can go here and you can get my settings. There's settings for everything. So sweeps, the bubbles, everything. It's all in there, and you're all welcome to it. There's no cost for TraderLab, and I don't know a better community personally, but then I'm a little biased, So, and I hope that helps you. So let's come now to the real time. Let's get now and see what's going on here. Remember, this was our target. So for me, the trade is done. I trade targets and probabilities. Doesn't mean the market won't go higher. But let's look at what else happened here. Now, I haven't seen this, so let's look at the order flow. What does it tell us? So look at the iceberg. So this is the stop and iceberg detector. So this is my target. Don't forget. Why? Fuel. What's fuel? Buy stops. Who's getting squeezed? The shorts. Do you want to be short? I don't know. Maybe. Subject to time frame. My time frame, hasta la vista, thanks for playing, back in the Barca Lounger. Or subject to my trade plan, I can trade rotations. But for this stream, what I'm trying to do in this stream, guys, is show you process. And process means formulaic, not predictive. This is a trading business's alignment. So once I get into my stops, what I want, and look at the icebergs, 1,000 icebergs, 600, there's all kinds of selling going on. Now, these are limit orders, and we can see them. So we can see them. Most other traders don't know anything about this or certainly can't see them. So what else do I see here? Buy stops. These are the stops that are sitting over this high. So they're coming out. Now I see my liquidity on the other side, and let's look at microstructure. Now, this is not necessarily a short, but for me, I'm only going to give you an idea, and these aren't recommendations. You have to vet everything. When I get into the fuel, either I'm going to get continuation buying or I'm going to get absorption. Buyers buy stops there, and then what's on the other side? Limit orders, the passive side. You got to have a passive participant when you have an aggressor, and the aggressors are the stops. They become market orders. But where's my aggressors? Well, I got some here. I got aggressors here, buy stops. But what's here? Seller. That's this guy, most likely. Limit orders, sellers. Buyers are here. But what's happening with my buyers? They're at a lower level. What's happening up here? There's sellers here. And you're going to ask me, well, how do you know? You don't see a bubble. I see the reaction. If I have because the market needs a buyer, and if the passive side is here, they're not going to gain ground. So they're buying and there's somebody selling. The sellers are below the buyers, which are right there. Lift. There's the buyers. Why doesn't it go up? Sellers are here. Lower price. Where's my buyers? My buyers were there, right there. You can see them. That's why it went up. And now my buyers are here. Lower price. That's why it went up. My sellers are here. Break low. What's it saying? What's this language that I'm talking about? Let's look. Now, I can't pick the high of anything. Not my skill. So I don't try. What I do is first of all, real estate, location, location, location. So if I'm hanging out with a long, I'm looking to see, do I get buyers here? Let's start with this. So right here is volume. Notice the liquidity, and my volume is coming in over here or a little higher. Let's mark this out. So here, this is where the buyers were. My buyers are here. My sellers are here. I break low. If I look at this, my buyers are here. This and this are the same. When I break below here, now my volume is up in here. Resistance, resistance, support, 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 resistance. These are shorts. So this is the counter trend short, you see. So this could be a short. This can be a short. And what happens here? We break high. And then what was resistance can become support, you know. So this is all resistance up here. That's why this could be a short. This can be a short. This is the same thing again. Let's look at the structure. Now, these are counter trend, right? Not my trade. I don't bother. Not interested. Unless I'm trading counter trend. And the only time I would trade counter trend is once I get my fuel and I don't have buying above. So this is still too high. There's my sellers. Look at this, the same thing here. Sellers took control. You could be short counter trend. Here, sellers take control. You can be short counter trend. But you need to know your counter trend. Can you see the difference? Can you trade counter trend? Yes. What is the dominant side? Out of balance, out of range, above higher time frame support. Would you take shorts? Me, no. Could you? Yeah. What's right for you? Does that make sense? So what is your time frame? And where do you get into a trade? Is this a place to get into a trade? Is this a location for a trade? We have a continuation trade in the TraderLab called the IB continuation trade. It's a structured trade. Now you noticed the longs were off the IB low. That is it's called the IBF. It's a reversion trade. It's qualified. It's a long. This trade is it's called the IB continuation trade. Now, for me, I perceive this as a higher risk trade, but it doesn't mean it's not doable. Now, let me explain it to you. This is an auction. This is the outside edge. In fact, hold on one second. Well, can't do that. We're outside the ETH. Our last variable high volume node is over here. It is support. This can be a long out here. The risk is to come out here. So the way to do this is not to chase the market. You must get a counter rotation. So this is a potential long, the IB trade. It's here. And the idea would be to come back here and then wherever. But the thing with the IB, if the IB is sitting here, you have to be looking out here because this is called mean reversion. The IB continuation trade, excuse me. Sorry, it's not mechanical. So a line on a chart, this is time-based. This is structure based on the auction. So you want to be looking here, but the trade comes out to here. So if you're buying this or wherever you're getting long, this is the outside edge. So you cannot, so if you get, let's say you get long here, you just put this trade on here, you've got to be out here. If you put it on over here, you got to be out there. If you buy it here, you got to be out here. If you just buy it here and it may go from here, you got stops here. This is the better place to be. And the high volume is sitting over here. So this is workable, but you've got a tight range to get risk neutral. Whether or not you take this trade, that's specifically up to you. I kind of trade into fuel as I perceive it, and it doesn't mean we're not going to go substantially higher today. But I'm just, and this is not, I don't call trades because I take stops, you take stops. So we all do that. That's just overhead and cost of production. Remember, this is not a business of right or wrong. This is a business of plan and edge. Do you have an edge taking this trade after the fuel has come out over that high where the stops were? That's the question. I don't have the right answer. There is no right answer. The right, when we talk again, right, wrong, it's your plan, not the outcome of this trade. This thing can go substantially higher. That was my target. We can still go here. There's stops here. So for me, we don't have to get here ever. We might get there some point or here. This is a low volume zone. Here's what we're doing. We're trading this multiple time frame. I'm sorry, guys. This was our support from Friday. This was our target coming up on Friday. Here, we gapped over it. We tested it from above. If it's too low, that takes us here. And then this is, we call the magical mystery tour, whatever, because it is a mystery, isn't it? So it's longs only, long continuation trades with the caveat that the market is now long. And if we can't get any traction above here, we can just start rotating. That's pretty much what the lay of the land is right now. Does that make sense? And again, I don't know what it'll do. I don't think about that because I have no idea anyway. But why put energy into thinking what it will do? You guys have questions? Why don't you post them there in YouTube or the TraderLab? So this trade, like I say, for me, I'd be in the Barca lounger, but it doesn't mean that it's not about my trade. It's your trade. I don't have a monopoly on right or wrong. Nobody does. It's just plan. So this trade, if you take this trade, it's in your plan. That's your job. Because we're always going to be uncertain. So that's part of trading, uncertainty. And we cannot get, quote, confirmation. That doesn't exist in trading. All you have is maybe. Make a note of that. The best you have in this business is maybe. Maybe it'll go up. Maybe it'll go down. Maybe it'll do none of the above. And will it use the polar route, or will it go down to go up, or does it go up to go down? If the market goes up, then there's stops in this leg. So what I'm always thinking about when I get like moves like this is there's going to be counter rotations. Then what is the average range of these counter rotations? You need to be aware of rotations. So where do you want to be a buyer? Do you want to buy it there? Or do you want to buy a counter rotation to get that? But what about this? Do you want to buy it here? Or do you want to wait for a counter rotation for a continuation long? If the context is up, do you want to be fading it? Or do you want to be using the counter rotations for continuation long? You'll take stops either way. Which side has the better probability for you? And you're going to take stops no matter what side. You need the answer to question before you put the trade on. And before you put the trade on, You need to have a plan that has a statistical edge that you've vetted. So when the trade shows up, you show up, and your job is not to be right or wrong on the outcome of the trade. You can't be. Your job is to know your trades, wait for your trades, anticipate your trades, know why that trade has an edge because you've done the research, you've done the work, and then your job, right or wrong, the right thing is to follow your plan. That's the measure in this business. The P&L is the outcome of a vetted plan. Not taking random pot shots, not gambling, not making it up, and not responding to your fear and greed. Because if you're only on an emotional, if you're using emotional stimulants, it's euphoria, depression, right? What do? Oh, I'm a hero. I'm so smart. Oh, I better bail out. Well, what happens if you get out here, which is support, maybe, and then it goes and makes a new high? Have you ever done that? Where does this trade fail? Do you know where that is? Do you have an edge taking a long here under these conditions if the fuel is taken out? You need to know the answer. And if you haven't considered it, it's one of those things you put into your research. So you can determine, does my edge change if I've gotten the stops out over a previous high where I know there are shorts trapped? And now if I don't get buying above here, then what? Do I have the same edge taking this long here as I would if these stops were still up above me? Isn't that a reasonable question to ask? Now, I don't have the answer for you, but those are the things that research is built on. You see? Because this is a structured trade in TraderLab. But is it the same if these stops were higher up? Does anybody know the answer? I don't understand that. When we open higher outside of range, previous highs still holding, the greed says adopt the new mean reversion strategy, fading new value area extremes. Previous high holding. Well, when you're out of range, you haven't gotten to the previous high. And if you don't fill the gap, that's very bullish. So I don't see any fading. Maybe I don't understand the question. What data provider is better? I use Rhythmic. For MBO data. There's also Bookmap data, which I have not used, but I hear it's pretty good. And I think it can give you some historical more than regular Rhythmic does. But that's available in the Bookmap website, the comparison of different data sources. If you want to use stops and icebergs, you need MBO data, market by order. Popo, go to bookmap.com, check it out. I think I can't give you a specific answer. It's not what I do. There's others that are better. You can drop support a question or just go to bookmap.com. They have a tremendous, not only it's an educational portal, but as far as specific questions on what data, just rummage around in there. This way you can get an appropriate answer. I'm not clear about the context grid sheet, what that question is. So this is very interesting. This is our IB, and we do have that IB continuation trade. What we know in here, let's come back here. This is too high. So if you're taking longs out here, you need to be scaling in front of these high volume areas. Now, if I go down in time frame, Now, when I talk time frame, I don't use a clock because this is not regulated. And I know a lot of us grew up with time frame, you know, and we go to 30-second, 1 minute, you know, slice and dice it down, you know, any way you want. But there's no time in order flow. Order flow is participant based. So whatever time it takes for the sellers to take control here is the time. Sometimes the time is 10 seconds and we can have a trade, or a not so much a trade, which you could if you have developed it, but you can now determine pricing. So right in here, when we broke away from this volume, sellers were there, buyers were here, sellers took control. That says this volume is too high, and you can see it right there. So that is resistance. So the sellers are also here. So this is because the buyers were there. Sellers, 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 break low, sellers, sellers. So this is resistance. So outside edge is here. So this is the IB continuation trade. The thing with the trade is the first job, in my opinion, is to get risk neutral. Get the risk off the table. Then you leave your stop under here, subject to your plan, and you have to vet this, and then it's trade management, or you don't move your stop, and I'm just saying it's a or, and then you scratch or it goes somewhere. I do suggest trade management. This is called VPOC migration. This is significant. Go to bookmap.com if you want to see what the deals are for the Black Friday extended deal to December 31st. Go to bookmap.com. All the configurations are broken down there. So, outside edge, IB continuation trade, VPOC migration. This is what this says. Let's talk again about the language of the market. This was the highest volume. This is the supermarket. Too high, too low, retail. If I leave it and I start a new one of these distributions, too low, too high, retail. And let's remember the sequence. The sequence was too low in the intermediate time frame, overnight VPOC, too low from the ETH time frame, developing time frame, too low now, developing time frame, leave it, retail price, developing time frame, outside of the first hour's high, bullish-ish. So continuation long, and you have to clear this. Your trade, if you take it, it's fine. My trade, I'm already good for the day. Different trading, different, just different. Not a right or wrong. Your trade plan is what determines what you do. And you have to remember something. Very important. This is probably the key element. Most of us don't know what we're going to do. We're kind of making it up on the fly. If you don't have it spelled out in black and white, and I mean every piece, then you are gambling because all you have is emotional stimulus. You don't have intent. You have fear. And so when I talk to traders, what is the primary requirement? The question is always going to be, what's your plan? And right now, if I said to you, what are you supposed to be doing right now? What's the market going to do? Well, I don't know. You ask me, I don't know. Then what do I know? I know where my trades are, and I know where my stop is, and I know where my resistance is, and I know my job's to get risk neutral. Now I don't know anything else. What else can I know? I know the trend is up. I know that this is the new price and that everything below at the moment, and that can change, is too low. I know this is a long structured trade, and I know I have to take out this high in order to have any opportunity to continue. And I know my next locations are higher up, and I believe it's out here, 45-ish, I think. Don't know. Let me look. So 49, and here's the 45 where it comes from, this target up here. This is the next target, 45-ish, and that is sitting on my Bookmap chart. This. So if I can keep going, this is my next target. Not a recommendation. Market never needs to go there. Is everybody with me? This is based on the profile. This is based on the auction, and it's random. So my plan, if I'm taking the IB continuation trade, which is a TraderLab structured trade, you guys can learn it. And remember, it's just a trade. Nothing more than just one. And it's in those 60 PDFs I've shared that you guys can reverse engineer. Unfortunately, there's no plug and play. And anyone who's been trading for a while understands, or you will understand, there is no plug and play. Well, remember, the job is to scale, get risk neutral. The job of a trader, in my opinion, is risk management. The primary input is the condition of the market. That's called context. Now, we were talking in TraderLab this morning about time frames and context. You can be a counter trend trader, obviously. We all, well, if you've been trading, and once you have the dominant side, then why not trade the other side? What I found for me, often what happens is, unless the condition of the market is two-sided, then I trade both sides and different. But in this condition, if I trade counter trend, often what happened to me, and this is many years ago, trade almost 40, it's going to be 47 years this coming year. So I've had a lot of time to do everything wrong. And by wrong, not right wrong because I didn't understand the business I was in. So I thought I was doing the right things, but they were not right based on the business. I just didn't understand the business. That's kind of different, right? So I would get short and be pretty excited about getting a downside rotation, maybe take my 3, 4, 5 points, whatever, 6 points out. Meanwhile, I'd be out of alignment because I was on the wrong side. I wasn't with the advancing side. I was with the counter rotation side. So instead of getting a 20-point trade, I'd have a 4-point, 5-point trade, feel really good about it. But all that rotation was an opportunity to get aligned with the dominant side. So I would take the weak side because I looked at them. I valued those trades equally when they were not equal. So I still had work to do, but I didn't understand something, the dominant side. To me, they were equal. So I was trading rotations. I was not trading the primary dominant side. So in TraderLab, I always suggest developing traders be able to identify the dominant side. Now, there are going to be times where neither side is dominant and it's rotational, but that's not the condition today. The condition today is north because of all the things I discussed at the top of the stream. Hope you're getting something out of this, guys. This is the TraderLab, and I want to invite everyone who's visiting today in YouTube or anywhere, even after the fact, that the TraderLab is a community of like-minded traders. So what it is we've all come together to leverage our collective experience. There's not a right or wrong way to trade. Let's get over that. There's no judgment. It's all comes out in the statistics. You can define what is, quote, the right way to trade if you know what your probabilities are of one thing happening over the other. That's where the work comes in. Nobody wants to do the work. The effort is to get the metrics. Then the requirement is to build confidence in those metrics. So when the trade shows up and you're a 100% random environment, which triggers fear and looking for certainty where it doesn't exist, it's like you have to change your mindset to understand you're in an alien environment. You're not on Earth. The rules that govern our lives here on this planet don't apply to the trading planet. The trading planet requires different behaviors, different beliefs and tangible metrics. You cannot overcome your fear and your uncertainty without something you can touch. If you don't have something tangible, all you have is emotional stimulus, fear, FOMO, fight, flight, and that'll put you out of business. It's done that for over 90% of retail traders. It's going to continue doing that until developing traders understand the business they're actually in. And if you're not sure what your business is, I can say something quite confidently, at least from my experience and what I've observed over all these years, is that indicators, black and white, red light, green light, is not what this business is. And if you're trying to make it into that, you're probably not going to be sustainable. So if you're looking for sustainability, you really have to break away from what other retail traders do and respect the statistics of retail trader failure and ask yourself, why does that happen? We all look for the holy grail, the thing that everybody else has missed. I can assure you anything you've thought about has been thought about by somebody else before you. So why keep trying to replicate what doesn't work? And I can't say to you that it won't work for you, but I will say that everyone else in that over 90% failure rate has thought the same thing. So it's up to you, but you might want to put your effort into something else. And you can do that in TraderLab or wherever. Not up to me to say. There are some good educators out there, but as you might know by now, there's also a lot of marketers out there who are marketers before they're educators. You have to determine based on your experience. And by the way, we all seek the sure thing. I was mentioning recently about how if you open up, I don't know, Crackbook or Instagram and all this, now they have how AI is turning Wall Street on its head. You know, $1,000, $30,000 in 30 days, blah, blah, blah. What's that? Come on. Isn't that nonsense in marketing? Well, we're all subject to it. We all want the sure thing. Why do they even market it that way? Because it hooks our psychology. And if you stop and think about marketing, go in YouTube world and look at the marketing. Now, TraderLab, I'm going to tell you, this is not for everybody because it's actually for somebody who's had the experience already of doing the other things and has also experienced the same thing I did. Trader Groundhog Day. Work hard, have random winning trades, wake up in the same place. Trader Groundhog Day. Tuning, tweaking, adding, removing, trying to make it better, looking back, curve fitting. I'll get it next time. And then the same thing over and over. Trader Groundhog Day. At some point, you got to just put a stake in the ground and say, well, I've learned something. I've learned what doesn't work. I guess I can't make it. And is it because you're not working hard, or might it be because the process is defective, not your intent? You may just be trying to bend this business into something it isn't. Maybe what has to change is you. And if I'm posing the question to you because I think you can get some of those answers in the TraderLab and in the Bookmap server and community. And you're all invited, by the way. So 45, who knows? Not a recommendation. That's my next level on up. So far, we are heading north, and whether or not it gets here, that's just a level on a chart, right? Thanks for visiting TraderLab, guys. Please leave a like on the way out. Subscribe to the channel. Don't forget, Bookmap is having the Black Friday till the end of year sale. If you've thought about it, now's the time to do it. You can even stick your toe on a monthly subscription with data, 60% off. All of this is available till the 31st. Even if you're a Bookmap subscriber, there's something here for you. So don't forget to like. Don't forget to subscribe. And also, if you're interested, there's 60 PDFs available to all of you in the Bookmap Discord TraderLab community. They're just screenshots of live trades and other trades I just thought would be interesting. There's no cost for this, and there is no plug and play. Some of this was research I was doing with Bookmap developers a number of years ago on things, and you know most of research where it ends up. I've done a lot of research over the years, built trading systems, fund manager, ran a trading desk, and a lot more. And none of that means that anybody avoids the stress the losses, and the mental anguish that comes operating in this environment. But the thing that'll be the greatest obstacle to you is not learning how to trade. It is you. So you've got to learn about you. You got to learn about how the market works, why it does what it does, how you might use order flow to get a statistical edge. That's the TraderLab, and it's available to all of you at no cost. Please give a like on the way out. Don't forget to use the link if you want to visit TraderLab. And I look forward to seeing you guys tomorrow. Have a great day. And thanks again, guys. Don't forget to subscribe to the channel. Look forward to seeing you soon.